Welcome to today's podcast on budgeting and planning for small business owners. I'm Nicole, and today we're joined by Omila, a financial consultant who has helped many businesses succeed through smart budgeting and planning. We're going to cover practical strategies, common mistakes, and real life examples of how budgeting can make or break a business. Stay tuned until the end for actionable takeaways you can apply today. Let's start with the basics. Why is budgeting so important for small businesses?
Budgeting helps small businesses to maintain financial stability, plan for growth, and avoid unexpected financial setbacks. Budgets can act as a roadmap which guides the business owners to allocate their financial resources effectively. For instance, we have had clients who did not have budgets before. They didn't have any financial objectives. No yardsticks missed their performance, and they frequently ran into cash flow problems. So when we helped them out, they could avoid all these problems.
Now that we understand why budgeting is important, how can a small business create a simple yet effective budget?
The key is to break it down into manageable steps. First step would be to track your income and expenses, understand where your revenue sources come from and where your money is going, and also the timing of all those events. And you can look at your past bank statements, invoices, and cash flow patterns to do this. The second would be to categorize your expenses. You need to separate your fixed costs from variables and see what essential expenses, and then you can control your spending and make more informed financial decisions. The third would be to set profit goals, define financial targets that aligns with your business growth, ensuring that they are realistic, measurable, and based on past performance. The fourth would be to plan for emergencies. You have to allocate funds for unexpected expenses to avoid financial stress. That continued fund ensures that your business can handle sudden costs without disrupting operations. The last one would be to review and adjust your budget regularly. Keep your budget flexible and review monthly so you can make necessary changes as you go on.
Budgeting isn't just about managing money in the short term. How can small businesses use budgeting for long-term success?
Long-term financial planning involves setting goals for business expansion, investing in marketing, and preparing for seasonal fluctuations. Because businesses who adopt effective budget controls have more visibility and insight into their financials, they soon begin to set long-term goals. These long-term goals include like upgrades to resources such as machinery, looking for new markets, and investing in new products.
So, should small business owners manage their budgets themselves? And what tools can help them? Or is it better to outsource to a professional?
It all depends on the business owner's financial skills, complexity of the business, and time that they can allocate for budgeting. For those who are comfortable with numbers, QuickBooks, Zero, or Wave accounting, or even spreadsheets like Google Sheets make it easy to track income and expenses. However, if managing finance feels overwhelming or the business has complex financial needs, such as multiple revenue streams, tax considerations, or cash flow challenges, outsourcing to a financial professional can be a smart move. They can ensure accuracy, optimize tax planning, and provide strategic financial advice. A hybrid approach also works well, where you use a software for daily tracking of your income and expenses and consulting an accountant for financial reviews and planning.
Well, this has been a great discussion. Before we wrap up, do you have any final tips for business owners?
Yes, my advice is simple: start early, stay consistent, and always review your budget. Treat budgeting as a tool for growth rather than a limitation. And if you ever feel stuck, don't hesitate to help seek from financial professionals.
Thank you for joining us today. See you next time.